Is Azad Zangana, European economist at Schroder Investment Management. He spent 4 years at the UK Treasury under former Prime Minister Gordon Brown. Good to see you, Azad. Thank you so much for coming in. So we had inflation month of March slowing to 4%. Is this a good thing?
Absolutely. It removes some of the pressure now that had been building for the Bank of England to raise interest rates. And to be honest, last month's rise to 4.4% was a real surprise for economists. So I think most economists will be pleased to see inflation coming back down to more sensible levels.
Nevertheless, with food and energy prices on the rise, is this slowdown likely to continue?
Not for the CPI. We do think the CPI has got a little bit further to go until the summer, until we see the full effect of higher food and energy prices feed through. But it does appear that higher food and energy prices are now reducing the power of the consumer in the UK, which means that non-food and energy producers are having to lower their prices as a result.
Because right now we seem to have a combination of high inflation and low wage growth. So what is the best approach? How is this affecting the recovery, people's spending power?
Well, it is reducing spending power across pretty much the entire economy. Very few sectors in the UK are able to demand higher than inflation wage rises. I mean, just a couple offhand. The manufacturing sector is very close to that, but the business and finance sector is also managing to demand better wage rises. But for example, the construction sector is actually saying wage deflation at the moment in nominal terms. In real terms, it's far, far worse, of course.
IMF downgraded expectations for growth for the UK this year, 1.7% instead of the 2% it forecast in November. Yeah. This is the largest downgrade of any major developed nation. Is this something to be concerned about?
Not really. And this was really a reaction to the very poor Q4 data that we had for the UK following the very bad snow. Absolutely, the contraction of 0.5% for Q4. So really, they just factored that in. It doesn't appear that they've actually changed the 2011 outlook for the quarter-on-quarter numbers, and they certainly haven't changed the 2012 numbers either.
Yeah, that stayed the same. But when you compare the UK's performance to Germany, Scandinavian countries, the US, it's not performing as well, right?
No, and it shouldn't, because it's not the export-orientated economy that the likes of Austria, Sweden, Finland and Germany are. And of course, we have to remember that Germany had a more severe downturn than the UK, and so we are seeing the bounce back from that.
What about the divide between the nation's capital and the regions? Is this a recovery that is evenly spread?
But no, it hasn't been evenly spread. Really, the recovery has mainly come through the business and finance sector, which ultimately is concentrated within the London and southeastern regions. No, the recession is still being felt in the north of the UK, Northern Ireland as well. And as we begin to get more and more information about public sector job cuts, that is also going to have an impact within the regions, probably disproportionately as well. But, you know, this is nothing new. We've always had regional differences within the UK, and the challenge for the Bank of England is to make sure that they judge the correct point in time whereby to raise interest rates and start to normalise policy.
And what do you expect they'll do?
We think they'll hold until about August, to be honest. A little bit probably later than the consensus. But I think that the MPC would like to see evidence that retail sales are going to start to improve. We had the British Retail Consortium this morning suggest that they've got record lows in terms of year-on-year like-for-like sales. And we know that we're getting an increase in national insurance. We've just had that come through this month. So the Bank of England will want to see the impact of all this fiscal policy come through.
I mean, they're unlikely to see the evidence that you talk about. I mean, when you think about the government's increase in VAT, sales tax, when you factor in public sector job losses, many people are saying, listen, the private sector isn't going to be able to pick up the slack. I mean, does this mean that rates will stay low for a while yet, if they're paying attention to this?
No, absolutely. I mean, first of all, I do think that the private sector will easily offset the job losses in the public sector. But you're right, they will have to be much slower in terms of raising interest rates. Interest rates will not rise anywhere near the pace that they have done in the past following previous recoveries. But they should rise at some stage. And for us, we think it'll be around August time when they have enough evidence to come to an accurate sort of conclusion that it's time.
Okay, Azad Zangana, European economist, Schroder Investment Management. Great to get your thoughts.